Hey, what's up, guys? Raybar checking in. I know it's been a little while. I've been taking a lot of time building some furniture, setting up my new apartment, kind of getting settled in with my new job. So I've been a little bit MIA towards the back half of 2023. But I'm hoping to get back to a regular posting schedule here in 2024. New year, new me, right? I don't know about you guys, but I didn't make any resolutions this year, just reservations with where I am, destined to be, so to speak. I have a bunch of financial goals for the year as well as personal goals. But let's get into the portfolio. So, over the last couple months, obviously the market has kind of rallied into the end of the year. So, you see here in the last quarter, we're up about $1,500. I'm continuing to do my wheel strategy on Plug Power as well as SoFi. But SoFi, honestly, I think is going to have an awesome year this year. I have, probably combined within my public and private portfolio, almost probably, I don't know, like 1,500 shares, something close to that, mainly from puts that I sold that got assigned back in like the, anywhere from $7.50 to $9.50 range. So my average cost is hovering somewhere around the mid eights, I guess. But I've been making premium from that. Right now, I just got a call credit spread out on Nvidia. If you look at the Bollinger Bands, 502 seems to be kind of a decent price. When I sold this, the delta wasn't kind of where I wanted it to be, but I'm making about like $50 to $60 in credit from these that I've been doing. I've been running call credit spreads on Nvidia for the last month and a half or so. This one is down, but if you go down to Nvidia right now, it's kind of going down. I don't think that we're gonna, I guess, go past the 502 standpoint, but if we do, I'm gonna manage the portfolio tomorrow and into the week. But I think that it's gonna end up expiring, under that 502, meaning I'll get to keep that $56 credit. Other than that, I've trimmed the portfolio quite a bit. I'm kind of concentrated here. So obviously SoFi Technologies, I'm going to continue to sell my calls on this, but I have been buying more shares, again, both here and in my private portfolio. I really do believe in SoFi. I think they're going to turn profit. They have a lot of kind of stickiness with their products. And once you're in their environment, it's kind of like Apple, right? Once you're in that Apple ecosystem, you stay there. And I think SoFi has built a pretty decent ecosystem to where the same thing is going to end up happening. Plug Power, I'm down quite considerably on this one. I have probably about 1,200 shares across my public and private portfolios. But again, this one, I think my average cost is pretty bad. It's like $8. Yeah. $8.50 or so. They plummeted after there was talks about potential bankruptcy based off of their financial position, especially in the rising interest rate environment. Their interest expenses, skyrocketed essentially, and they're not turning a profit. This one I'm going to continue to sell calls on, but the moment I can get out of it, I'm going to definitely get out. My average cost here shows, excuse me, about $8.43, but in reality, I would say my average cost across my entire portfolio base is like $7 and some change. But again, I've been making premium, so it's potentially maybe in the low sixes or high sixes. I don't have my spreadsheet open because my computer is dead. But as soon as I can get out of this position, definitely gonna get out of Plug Power. I don't see a future in it with hydrogen technology. Again, I was just selling because they had really high implied volatility, so the options premiums were good as I was selling them in the back half of the year. Origin Materials. I made 2 videos about this stock. I still think that it's going to be a pretty good stock into the future. I'm down quite considerably because I had bought right before. You'll see that in one of the videos before an earnings, and obviously it didn't go in my favor. But I'm buying several shares a day in this just to kind of keep up. Between my public and private portfolio, I have probably 4,000 to 5,000 shares. So really looking forward to that one turning around in the near future. I just think that, with the massive push in sustainability, it's, a no-brainer. Palantir Technologies, obviously, that one with a whole AI push in the back half of 2023 going into the future, I think that's going to be a really good play. And then the biggest portion of my portfolio is in the S&P 500 index, VOO. I mean, this one, up 17.5%, 18%. You're not going to beat the market, right? I think the other plays I have is I just enjoy buying stocks, individual stocks, trying to beat the market. There are a couple that, here I'm up 29%. So there are going to be the outliers that are. But again, if you think about it, the top, I think, 7 or 8 holdings in the S&P 500 index are basically going to be your top high-flying tech stocks: Microsoft, Apple, Nvidia, Tesla, and Amazon, Google, right? So if you're in those stocks, you're probably going to end up beating it, but you don't want to be overly concentrated. So I think that having VOO as my main portfolio or my main holding is good for kind of a built-in diversification run. Have an income play here with Main Street Capital. It's a business development company. They serve kind of the middle markets for businesses that make, I think it's like 2 to like 50 million a year. And I think this is good because as interest rates continue to stay high, which they are projecting 3 to 4 cuts this year, actually not this coming year because it's 2024, but they are lending to those that the banks are kind of tightening up on. So as we see interest rates come down, this one could potentially suffer, but we are at all-time highs in the mid-40s right now, but I'm trying to build up to about 100 shares and then probably let this one kind of run. So I think my yield on cost is like 7.5, or my yield on cost in terms of a dividend perspective is going to be like 7.25 or something like that. So that's pretty good yield. Microsoft, Apple, don't need any explanation there. Playing software and hardware here. I think both are going into services. Microsoft, obviously, with AI. I think Apple is going to have a big turnaround in AI with their new Apple glasses or whatever they're called. So obviously, going to keep an eye out for that. Archer Daniel Midland, a kind of food processing company, sells like soy, corn, all that kind of stuff like that. I think obviously food is going to be massive. Going to go heavy into Republic services as population continues to grow. Waste services are going to be kind of a key, player in the space. They're only going to expand. Technology is constantly improving, and I think this is just going to be a great stock into the future. I mean, if you look at it, like look at this stock chart, right? In maximum time, even in 5 years, trash is only going to get bigger, and someone has to service it. Kenvue, still kind of a hit or miss. I think there's a ton of lawsuits kind of coming even after the spinoff. So this one could be a speculative play, but I think long into the future, selling products like Band-Aid, Listerine, etc., I just think that it's going to be a great play, building quite a substantial size in my portfolio, both public and private. But more to come on that. Outside of that, guys, pretty much just, watching a couple of these stocks. AUR has been absolutely on a tear. I ended up selling out of all mine here in this portfolio, which I had about like 200 shares at an average cost of about $1.90 or something like that. So profited about like 4x on that, or 2.5x almost, excuse me. And then in my main portfolio, I think my average cost was like $1.62 with like almost 1,800 shares, and I had sold calls on it. I think, 9 or 10 calls at the 250 strike. So those all got called away from me, obviously. But I made decent premium on those, and I still hold about another 700 or 800 shares. But I have a $5 call on those for January 15th, I think it is. So, or 18th, whichever is that last Thursday or last Friday or third Friday, of the month. Intel finally paying off for me. I don't have it here in this portfolio anymore, but I do have it in my main portfolio. I have about 200 to 300 shares at an average cost of around like, I think $37 or $38 or something like that. So made pretty good money on this one. Might go ahead and exit the position and kind of put it into some dividend ETFs, but to be determined, right? Hope you guys had a wonderful New Year's and a Merry Christmas. Go ahead and drop a comment, like, subscribe, and hopefully you're still here in this part of the video. If you are still here at this part of the video, comment snowflakes, because look what's happening on the screen right now. It's a pretty cool graphic. Love you guys. Thank you guys, and see you next week.